Hello ladies and gentlemen, I'm Joseph Novichkov, the Senior Trading Manager for GDMFX. With today's outlook, we're starting right now with the US dollar. It was about 0.2% from a 2-year high versus the euro as US jobs gains and of course highlighted the divergence in monetary policy between the Federal Reserve and the European Central Bank. The euro weakened versus higher yield currencies as German data showed factory orders declined the most since 2009 in August. Right now the dollar is at 1.2532 per euro. In Japan's currency slid to a 6-year low last week following its worst month since January 2013 in September on prospects for the Bank of Japan to continue unprecedented monetary easing while the Federal Reserve weighs the timing of its first interest rate increase. Kuruda will hold a news conference after a 2-day meeting with his board that starts today. The USD JPY right now, we're looking at the chart, is at 109.36. Let's take a look at the British pound, which had its biggest weekly drop in 15 months, sinking below $1.6 per pound for the first time since November. Right now is at $1.59 as signs the UK economic recovery is fading, dampened on higher interest rates. Now the pound slid 1.8% to 1.5960 at 5 p.m. London time yesterday, falling the most in a week since the 5-day ended July 5, 2013. UK house prices are set to fall in 2015, the first drop in 4 years, as the prospect for higher interest rates, of course, quells demand. Going briefly to the commodity sector, starting with gold that extend losses to the lowest since a year after US payrolls beats the forecast, boosting the dollar and of course stoking expectations. The Federal Reserve will raise interest rates. Higher rates, of course, reduce gold's allure because the metal generally only offers investors returns through gains of prices, while a stronger dollar typically cuts demand for a store of value. Therefore, speculators paired bets on rising prices for a 7th week and assessed in the SPDR Gold Trust have dropped to the lowest since 2008. The metal, of course, looks oversold on the daily chart, and we could see some corrections to the upside to retest the 1200 level. Hedge funds, of course, increased bets on rising oil prices just before crude futures tumbled to a 17-month low on signs that the global supply is outstripping the demand. Now, prices capped the biggest weekly decline in 2 months after money managers boosted net long positions in West Texas Intermediate by 4.1% in the 7 days ended September 30. Long positions climbed 2.7%, a data from the US Commodity Futures Trading Commission. That is all for today. However, keep an eye on the economic calendar this week. Interest rate decisions for Japan, UK, Australia, and of course on Wednesday, FOMC minutes. Thanks for watching. Bye-bye.